What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, I will be performing a technical analysis on the price of gold and gold's pattern. I will show you guys what it looks like, where do I see those key support and resistance levels, and where do I personally see the value of gold going remainder of the year, going into next year. So if you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. So this video was highly requested by a few of our members, which is why I figured I'd go ahead and do a complete technical analysis on gold. We will look at the monthly and the daily chart. I will show you guys what the pattern looks like and where are those key support and resistance levels. So going back as far as 2002, early 2000s, you guys can see that when the gold was trading at around $310 an ounce, it has gone up significantly, all the way trading up to over $1,900 per ounce for the price of gold, giving us a good 561% return in the last 11 years. So this right here was the all-time high that the price of gold hit back in September of 2011. So we will go ahead and put a price label right there. So the high value for this was $19.20 an ounce. So we're talking right around there. So this right here is going to be the all-time high for gold prices. And since then, you guys can see that it consolidated a little bit at around the 1790 level before getting rejected and pulling back. So that right there is going to be a very clear form of resistance at around $1798 to $1,800 level because it has gotten rejected multiple times. And we're talking months here because these candles are the monthly candles. So we're talking the month of November, then we're talking the month of February of 2012, and then again these couple months in October and September of 2012. So 4 months it got rejected at the $1,800 level and then essentially sold off. So then after it got sold off, moving forward, you guys can see that in 2013 it essentially started consolidating in this range. So if I were to highlight the high points and the low points, the price of gold was essentially trading in between this red area. The high point being at around 1430 and the low point being around 1050, which is where the price of gold essentially found its support right around here in November and December of 2015, and then the resistance being at around 1400. And then more recently, you guys can see the 4 months in September, October, November, and December of 2019, and essentially consolidated here before breaking out of that level. And now it's going to retest its resistance of 1800 from back in October and November of 2011 and 2012, right around that level. So now we're going to jump into the daily price and kind of understand where those key support and resistance levels are and look at the price action more recently. So you guys can see that it pushed up, and then you can kind of notice this minor area of consolidation where the pattern essentially was going sideways, with the high point being 1750 and the low point being 1670. So this is where it essentially found its support, and the reason it found its support here is because that was also acting as a previous resistance back from March 2020 when the pattern got rejected here and then sold off as low as 1450, giving us a drop of close to 13%. So then it finally broke out of that level and then essentially consolidated. This old resistance started to act as new support for the price of gold, and then it finally broke out of that resistance at 1760, and then now it's trading at around 1770. Today it's down about 64 basis points. But the interesting thing would be if it breaks over the $1,800 level, which is going to be the price target from back in September of 2012, which is also its next near-time resistance. And then obviously breaking out of that level, going to all-time highs at around 1921, which is where the all-time highs are going to be for the price of gold. So right now we're about 8 to 9% away from the all-time highs, but there is a clear resistance at, like I said, 1800, which is about 2% away from its current level. So if you're someone who is actually investing in the bullion market and you are investing for the long term, because obviously gold is perceived to be a safe haven investment and a hedge against inflation, especially in the market environment that we are in, personal income has gone up, consumer spending will be increasing month over month, so there's no guarantee that we're going to stay in the same market environment that we're in. We could see some type of inflation in the markets going forward, which is why I personally feel like the price of gold will touch all-time highs, if not break out of that level, going into 2021 or the remainder of 2020. So that's kind of like the price target I'm going to put on gold, is essentially retest the 1920 level, the all-time highs, because we've also seen such a buyer momentum market here more recently, and due to the fact that we're in an environment where interest rates are near zero, and the Federal Reserve and the central bank said that they were not going to raise rates until 2022, that's also kind of a positive catalyst for the price of gold. Again, like I said, it's considered to be a safe haven investment and a hedge against inflation, and it's going to be really good for the miners for gold, because as the spread increases, their cost of mining is still relatively high, but the price for this precious metal is also increasing, so that's an increasing spread and more profitability for these miner companies. So I hope that makes sense, and I wanted to go over the technical analysis and the technical pattern for the price of gold and where those key support resistance levels are. The more near-term resistance to watch is going to be the $1,800 level, which it has retested a couple times here in the past, in 2011 and then in 2012. If you're able to break out of that level, then the next resistance is going to be the all-time high at 1920, and the next support is going to be around 1680. So I wouldn't be surprised if the pattern essentially consolidates within this range before breaking out of that level to retest its all-time high at 1920. I also want to mention, if you're a long-term investor in the price of gold, I wouldn't worry too much about the day-to-day price action for this commodity or this precious metal, because again, you see the long-term value in this precious metal, but it's really interesting to witness the breakout and where the price is headed next. If you're someone who's trading, those are some levels that I would be watching very closely, which I've already mentioned. 1921 obviously being the all-time high, 1800 being the next resistance, and 1680 being a very clear level of support, which has previously acted as a resistance. So I personally do see the price of gold consolidating within this range for the foreseeable future before breaking out of that level and retesting its all-time highs. Please always remember that this is not financial or investment advice. This is just my opinion and my analysis of where I see the prices for gold going in the near future. Always make sure to do your own research and your own analysis before investing in anything. So I hope you guys enjoyed this video and my quick technical breakdown on the price of gold. As always, if you guys enjoyed this video, please make sure to drop a like and subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to these stock breakdowns and technical analysis. And I also want to quickly mention that I was watching Bloomberg today, and Bank of America's commodity research department was on there, and they put a price target of well over $3,000 in the price of gold because of the easy monetary and fiscal policy that they foresee remainder of the next 2 years, and due to the interest rates and the fact that investors, both retail and institutions, according to them, seem to be a little bit confused as to where the market is going to go in the future, which is why the demand for this precious metal could go up, which is why they have put a price target of close to $3,000, but that's also over the next few years and not in 2020 alone, going into 2021 and in 2022. There you go, guys, a complete breakdown on the price of gold. And if you guys enjoyed this video, please make sure to drop a like, subscribe, and hit that notification bell so you don't miss out on any future market updates. As always, happy investing, and I'll see you guys in the next video.